Hello dear friends, in this week's video we'll be exploring the latest global developments in the apparel and textile industry and analyzing their impact on the sector. But first, a quick reminder, don't forget to subscribe to our channel, like and share. That's what keeps me motivated. If you're ready, let's get started. In the first 8 months of 2024, Turkey's apparel exports to Germany dropped by 8.7%, falling to $1.92 billion. Despite this decline, Germany continues to be Turkey's largest apparel export market, with a 17.4% share. This decline highlights the impact of economic challenges in the European market on Turkish exporters. The contradiction in consumer spending in Europe underscores the need for market diversification. However, the reasons behind this decline are not only limited shrinking demand. As we've discussed in the previous weeks, Turkey's inflation and inability of exchange rate to keep up with have also significant impact to the sector. This week, the Producer Price Index for international markets was released in Turkey. It shows that international producer prices remained nearly flat on a monthly basis, but increased by only 30.7% annually. In the apparel category, international producer price inflation was slightly below average at 29.8%, and for textiles, it was even lower at 25.7%. This growing gap between domestic and international producer inflation has been a key challenge. As mentioned in previous weeks, Turkey's domestic apparel production inflation stood at 44.5% annually, widening the gap to 15%. This disparity, coupled with shrinking demand, continues to erode Turkey's competitiveness in apparel and textile export markets. Turning to the US market, during the first 9 months of 2029 this year, US textile and apparel export fell by 2.76%, totaling $17.36 billion, while imports surged by almost 9%, reaching to $76.86 billion. Export to Mexico increased by 2.86%, but shipment to major markets like Canada, China, and the Dominican Republic declined. These trends indicate that imports continue to hold competitive edge in the US domestic market, while risks persist in international trade dynamics. Things could become even more complicated with Trump returning to the office. Earlier this week, he announced plans to impose 25% additional tariffs on imports from neighbors Mexico and Canada and 10% on Chinese imports. While Trump's policies are often unpredictable, this move could potentially offer a slight competitive advantage to the exporters targeting to the US market. Despite a 4.8% decline in global trade volumes in 2024, the Asia-Pacific APAC region has demonstrated greater resilience compared to other regions. Countries like India, Japan, and Australia have played a pivotal role in maintaining this performance. And we must not forget Vietnam, which has made significant strides in apparel manufacturing in recent years. India's strong economic growth has been a key driver of the region's positive performance, positioning APAC for a more prominent role in global textile and apparel production. According to Moody's, India's economy is in a sweet spot with a projected 7.2% growth in this year. Growth is expected to moderate to 6.6 and 6.5 in 2025 and 2026. While fluctuations in food prices and geopolitical risk may prompt the Reserve Bank of India to tighten monetary policy, rising household consumption, an improved investment climate, and robust economic fundamentals continue to support growth. India overtook China last year as the world's most populous country, and its textile and apparel industry plays a significant role in its economic narrative. As of September 2024, India's textile and apparel export grew by 12% year-on-year, supported by the government's 100-day transformation plan, which focuses on infrastructure enhancement, technical textiles, and natural fibers. Ready-to-wear apparel export alone surged by 17%, driven by these new textile policies. However, industry representatives have pointed out that a lack of skilled labor remains a significant challenge. advantage. On the bright side, many Indian states are introducing their own textile policies to boost labor productivity and addresses these issues. Speaking of India and its regional partners, let's take a closer look at BRICS, a growing economic alliance that includes Brazil, Russia, India, China, and South Africa. The BRICS nations aim to deepen economic cooperation and reduce dependency on the US dollar in global trade. Earlier this year, Türkiye also participated in discussions to join this bloc. Among the key players in BRICS, Brazil stands out as one of the world's largest cotton exporters, often competing with the US for the top spot. In 2023, last year, Brazil and China reached an agreement to conduct bilateral trade in their local currencies, the Brazilian real and the Chinese yuan, bypassing the US dollar. The strategic partnership has significant implications for the cotton and textile industries. In the first 9 months of this year, Brazil exported $1.4 billion worth of cotton to China, while importing almost $1 billion in apparel and $1.3 billion in fabric from China. This arrangement resembles a kind of outsourced production system, where China remains the dominant partner in the trade balance. Throughout 2024, global cotton prices have remained relatively stable. The A index saw a slight dip from 85 cents to 83 cents per pound, while New York ISE December futures fluctuated between 67 and 75 cents, staying with a narrow range since June. Local currency fluctuations in major producing countries like India, China, and Pakistan have been significant drivers of these price trends. As one of the largest cotton producers and exporters, the US plays a crucial role in the global cotton market. In 2024, 70% of the US cotton harvest was completed, slightly below the 5-year average of 72% for November. Meanwhile, a weaker dollar provided a competitive advantage for US cotton in international markets, boosting export prospects. ICE cotton futures for March 2025 contracts traded at 69.23 cents, signaling modest recovery. However, weak demand and uncertain market conditions warrant a cautious approach to future pricing trends. Additionally, a stronger dollar following the US elections could exert downward pressure on cotton prices. Beyond cotton, rising production costs for synthetic fibers like polyester, driven by higher oil prices, are indirectly impacting demand for cotton. Higher petroleum prices are making polyester more expensive, increasing interest in natural alternatives like cotton. A potential decrease in global conflict risk, which we all hope for, and falling oil prices could once again shift this dynamic. In this video, we've covered key developments in the global apparel and textile supply chain. Stay tuned for the second part of this week video series, where we'll explore sustainability in supply chains, technological advancements, and the crucial role for logistics and transportation in global trade. Looking forward to seeing you there. Take care and see you soon.